Ohio, which I think most people are familiar with in this room. If not, just very quickly, we provide interest-free loans to those who would not otherwise have access to resources, to loans. So we, about a year ago, started some conversations with Citizens Bank and thought that it would be a really great opportunity to bring some of their expertise to some members of our community. So we have been working with Brandon and his partner, his coworker who's not able to be here tonight. He can give you more information on that, but and hope that this is a really meaningful conversation for everybody. We've been having some of these community dialogues separately for the past couple of weeks, and there have been some really great questions that have come out and some really good information. So we're really excited to be able to do more of these kinds of conversations and share this information with more members of the community. So with that, I'm going to pass it over to Brandon and let him introduce himself and to talk a little bit about what we're going to talk about this evening.
Thanks, Carrie. Appreciate it. Yeah, so I did have a partner in crime this evening, Keisha Wilson, who is, oddly enough, Keisha and I go way back. We've both been in banking for, I think I'm on year 16. Keisha might have a couple more years than me, but we've worked at a number of different banks together. So it was good to meet up with her again. She had a true family emergency that took her immediately out of Cleveland this evening, unfortunately. So I'll be flying solo, so you get to hear my beautiful voice all evening. So you're welcome in advance for that. But just a little about me. So again, I said, I've been in banking for 16 years, kind of all through it. I started, credit has always played a part one way, shape, or form. So I started actually in consumer credit with a credit card company on the West Coast. All consumer credit, came back to the Midwest, worked in retail banking for about 10 years. And I've been in business banking now for about 5 years. So it's been a fun journey, but credit is so crucial. 9 times out of 10, when people come to me and they need money for their business, or, I've got tons of business owners that I know, they come to me and they need, hey, I need a loan for personal reasons. Credit is you can't get far without good credit. Unfortunately, it's just such a key factor. And I think everybody knows. I see a lot of nodding heads, like everybody knows it. And, one of the things I tell people, it's become, I don't want to say it's a game that we have to play, but, if I'm being honest, as a lifelong banker, it really is, and you don't mean you're like falsifying things, not like that, but like, the more you understand and the better how a bank is looking at you versus how an insurance agency might look at you versus how an employer might look at you. I think it's really, really important, to really get a good understanding of that. So I think that's from our point where we feel like it's just so pivotal, so pivotal. So Hillary, are you able to put the PowerPoint up, and I can kind of walk through that if we're ready to do that? And I apologize, I had all the PowerPoint set up, and for some reason my laptop that is for work does not like Zoom. So Hillary's going to be flying along with me. So there's a little intro there. You can go ahead and skip past that. So that is our contact info. So we can put that up later if anybody needs to reach either myself or Keisha. Back to Keisha real quick. Keisha's been on the retail banking side for a very, very long time. Either one of us, she is in the branch and works more on the consumer side than I do on a day-to-day basis. So again, any questions beyond tonight, either one of us are obviously happy to answer. But kind of on the agenda. So importance of credit. I kind of tapped on that in the beginning already. Credit reports and credit score basics, very, very important there. Factors of your Fico score. I think everybody knows about Fico, but it's a matter of, what comprises your Fico and, what it does. So tips on how to improve your credit score. And then we'll have an activity, and hopefully if technology agrees to this, we'll have a little activity where we can have a credit score simulator to kind of show how different things affect the your score, and what you can do to to make it better, or what could happen that could really make it worse. So we can go to the next slide for me. So credit reports, credit basics. If you don't know, your credit report, it's a document that it contains your credit history, right? So banks, financial institutions use the reports, helps us as a bank to access, or rather assess your ability to repay a loan or a credit card or any kind of debt that exists. Credit cards or credit reports rather are also used by employers, part of background screening, even landlords when reviewing an application for housing. I've seen that coming up, more and more. A lot of times I think it becomes the, oh, hey, it's, well, I'm just going to rent, so I don't have to worry about my credit. I'm not ready to buy a house yet, and I'll fix my credit. And you could go to apply for, to go live in an apartment. And a lot of the bigger apartment buildings will do this, but even smaller, single tenant landlords will do this as well. So, I think that, again, the first step, being able to understand your credit reporting is really to understand what it is and what is and what isn't included. So kind of taking a closer look on that, two big factors that affect your credit score are whether you repay your debts on time, and as you've agreed to, and also how much you currently owe on each account compared to your credit limit, again, called your utilization rate. So in my line of work, utilization is huge. So on the bank side, if you're seeking out new credit, whether it's for personal or business reasons, how you're using your credit, it doesn't hold as much weight, and we'll see on the next slide in a minute, but it doesn't hold as much weight as your payment history. But it's pretty big, because it says if you've got, a $10,000 credit card and your balance is $9,000 on it, maybe well, I just made a big purchase and I'm paying it off because I got a big bonus at work, and that balance is going to be gone. But if you're applying for credit at that very moment, a bank says, oh wow, they're overextended. Maybe something's going on where they had a big expense and they're not going to be able to pay it off. So we're going to be worried about giving them new credit. So utilization rate is huge. Additional factors, also, of course, how long you've had your current loans and credit cards, and the different types of credit. So, having student loan, nobody likes student loans, but having them on your credit report is kind of in a positive manner. If you're paying them on time as agreed, one of the big benefits of them is that, they're an on-time payment every month. It's an installment loan, so it doesn't affect your utilization. So it won't affect you if you go to buy a car or to get a new credit card in terms of, debt being out there, but they're, as an installment loan, they're good sources of repayment. So I know we don't like having student loans, but the upside, if we're paying them, it's a good, good deal there. So, people, kind of talking about credit, people with higher scores, I think we all know this, like they present a lower risk. Lower score means a higher risk, so if your score is low for any reason, it just presents something happened that made it low, and the bank is going to view you as a higher risk. So two of the most common scores, so I know a lot of folks I talk to, there's a little bit of, there's so many scores, right? Like your credit card is like, oh, hey, we'll give you a free credit score. And then I use Credit Karma, not related to the bank at all. It's just something I've used for probably the last 6 or 7 years just to monitor my credit for fraud reasons, and identity theft. So those, the FICO is the score that banks use. And if you go to buy a car or you're going to buy a house, FICO is the score. So Fair Isaac Corporation, they devised this scoring, and that's what all the banks use. If you're on Credit Karma or some of the credit cards, if it doesn't actually say FICO, they're probably using what's called the Vantage Score. Vantage Score, and there's Vantage 1.0, 2.0, and 3.0. I know Credit Karma uses Vantage 3.0. They're not your FICO score. They're weighted a little bit differently. So you could be on Credit Karma, like, oh man, my credit score is only 670, but then you go to apply for a loan, it's like, oh, it's 722. Like, okay, well, like what happened in the 2 days, between checking that. They're just different scoring methods, and they weight, things are weighted differently in terms of how heavily they impact your score. One thing to keep in mind, is that your credit history and your score, it's evolving, constantly evolving. And it's possible to have a low credit rating, to take steps to improve your score. It's just a snapshot. So, just kind of keep an idea that it's just a snapshot in time. Yes, it can take some time to improve it, but just be aware that it's just a snapshot of today or last week, or, whenever your credit was pulled. So, so we can go to the next slide. We'll kind of look at how scores are determined. So I was kind of talking about how things are weighted differently with different scoring mechanisms. The biggest, the big five factors, the 5 key factors, and this is a general FICO model. It's safe to say that all of the scoring models, whether you're checking it with your Chase credit card or Discover or Credit Karma, all of these factors are pretty much in there. The percentages, though, just might be a little different. I've actually noticed, so if you look at this, payment history with FICO is 35% of your score. Clearly, the majority, it's a big reason FICO scores, and that's what banks want to see. They want to see that you're paying things on time. The amounts that you owe, so if you have, again, going back to my $10,000 credit card, if you've got a $2,000 balance on it at the end of the month versus an $8,000 balance, that can impact your score tremendously. Length of your credit history, credit mix, and new credit aren't as big of factors. Length of credit history, for the most part, only comes into play when you are building your credit. So, somebody might say, oh, I got a credit card, I've been making payments, but you've been doing it for like 7 months. Whereas someone who's had credit for 10 years has been making payments on time for 10 years. Also, if you have a glitch or you have a hiccup in your payment history, the longer your payment history is, the less likely your score will be impacted as heavily, because you have all those other payments, out there to offset it. What I was saying too about Vantage 3.0 that a lot of the credit card and Credit Karma uses, they tend to weight the amount owed or your utilization a little bit higher than your payment history. So that's just something I picked up on. So again, those scores are not your FICO score. The only way to get your FICO score is, one, to pay FICO, their Fair Isaac Corporation, their website, to get it. And then the other way is if you apply for credit and you're denied, or if you do apply for credit, most banks will say, oh, hey, here, by the way, this is the score we use to in giving you your credit. But if you're declined credit, you'll always know, or rather have a free access to your report. So, depending on the service, like I said, a lot of companies offer simulations, and we can kind of show, or that'll show you like how you can impact your score by changing some of these factors. So we'll go to the next slide and take a look at what makes a good credit score. And talking about the simulation, we'll actually skip to the simulation at the end. We'll get through these, and I'll show you kind of how we can kind of simulate. You can try it on your own as well. So what's a good credit score? It's really interesting. I think in the old days, at least growing up in banking, and my career, 720 used to be like the benchmark. If you had 720, it was like, oh, my credit's perfect. Like that was like, if somebody would come into the bank and say, oh, I need a house, I'm buying a car, I'm doing whatever. Oh, okay, good. How's your credit? Oh, it's great. It's 720. Okay, that was like the benchmark. Ever since 2008, the recession kind of changed that, and it kind of, banks were like, oh, okay, like 720 is good, but like now 740 and up is like, okay, now it's really good. The only way to get a credit score above 740 is if you have a lot of credit extended to you and you're not using much of it, and you have a perfect payment history. So it's that's the only way, really, that's the only way you can shoot for that. So if there's issues, or if you had missed payments or whatever, don't beat yourself up because your credit score isn't perfect. Like, it takes time. I don't think I've talked to anyone who at one point or another, their credit wasn't perfect, or it was, nobody's credit was always perfect. We either fall on hard times, we need to make a bunch of purchases because maybe we move and we have to, cover the costs of new things for our house or for our apartment. And just, there's times when it's just not great. So all you can do is, I think the biggest thing for you know, to manage your score is just to make sure you're paying your bills on time. And really also, if you know, letting things go to collections, you know, if you have a medical bill that you haven't paid for a couple of months, you're like, oh man, I forgot about it, I have to go pay that. That doesn't affect your credit. If your phone bill is late by 1 month or 2 months, it doesn't go to your credit. If you don't ever pay it and then they send it to collections and you wait until you get that letter from collections to, you know, to say, oh yeah, I forgot about that, I better pay it, it's too late. It's already on your credit report as an open collection. Even if you paid it, it's still going to be on your credit report for 7 years that you had a collection, which is the worst. And you can't get away from that. A bank will see it. You know, a bank will see it and they will hold it against you for a while. So from that perspective, you know, just make sure you're paying stuff on time when you get a bill. You know, pay attention to it. So obviously very important there. So we'll go, Hillary, we can jump to the next slide real quick. So, you know, talking about good scores, you know, may have touched on some of these already, kind of ways you can improve your score. You know, build your credit file. Sounds kind of silly, but, you know, open credit accounts that'll report to your credit. I can't tell you how many people I meet that come to me for credit for their business and they say, oh no, my credit's okay. Oh, good. Well, I've never really had any. Like I don't need it. Like a lot of people take that like I've never needed it, so I didn't get it. And this goes back to when I first talked about playing the game, right? So if you play the game and open credit when you don't need it and never use it, but maybe use it a little bit, you know, like that's how you build a credit file. You just want to show that you're able to make payments on time. You want to show that you're, you know, that you're able to manage it. And again, even if you have an open card and you don't use it, or maybe you can pay cash for something and you have a credit card, fine, pay it with a credit card and then just make a payment 2 days later to pay the balance off. You know, things like that will help your credit. But again, use that to your advantage. You know, a lot of times for parents will do this. My parents did it for me. I think my wife's did it as well. You can add authorized users. So you can have people as soon as they're 14, I believe. You can add someone as an authorized user. That's a really good way. If you have kids and you want to help them kind of boost their credit report, have them add them as an authorized user. Don't give them a card unless you really want to, but you don't have to give them a card, but you can add them as an authorized user, and the credit bureaus will put together their name and your address and understand that it's, you know, you're in the same household, and it'll start building their credit, even if you don't use their social security number. So that's a lot of ways that your credit file is built on your name and you know, built on your name and your address. So, or again, if you're rebuilding your credit and you have a family member or a really good friend who, you know, if you know they have good credit, or, you know, you guys, if you happen to talk about it, ask them if they'll add you as an authorized user. And again, don't get a card from them, but just say, hey, add me to your account. Hey, you do it for a year or 6 months or something, just to kind of help boost your score. So there's some little tricks like I said, about kind of playing the game. You can utilize that you know, to kind of help improve your score. But again, keeping in mind on the opposite side of it, if they misuse their credit or they max the card out or they miss a payment, that will also you know, also reflect on you. So you know,
But there's a question that was dropped in the chat.
Yeah.
Sorry to interrupt.
No.
There's a question about credit card companies. Can they close an account without your knowledge, and does that hurt your credit score?
That's a really good question. I know that's really frustrating when that happens, especially if you wanted it, or you know, I've had in the past where I had one card that I was using for a bunch of stuff, and I had a balance that sat on it for a while, and then I paid the balance, you know, totally paid it off. And as soon as I paid it off, like 2 days later, they dropped my credit limit by like 80%, which I was not happy about. That was not did they let me know? Sure, I got something in the mail like a week later, right? But back to the question, it's tough to say. Will it if it was your only credit card and then they closed it? I mean, yeah, that could technically affect your credit, but you could fix it very easily by getting another credit card, right? I think it would only affect you if, like, let's say, going back to utilization, let's say you have 2 credit cards, each of them have a $10,000 limit. One of your credit cards you use for all your stuff every month, and you put some expenses on it and there's $5,000 balance. So with 2 cards, you're only 25% utilized. You got 5,000 used out of 20. And let's say, unbeknownst to you, this other card, they close it, and now you have that 10,000 of available credit that was on that second card doesn't exist. So you're now a $5,000 balance on a single $10,000 credit limit. You're now 50% utilized, which that can affect your score. So from a utilization standpoint, that's a much bigger impact in terms of like just them having it closed. And I think I'm guessing, I think it was Anita that asked this on the question below. I think it's on your credit report that the creditor closed it. Most banks, I'm speaking from my experience, most banks they don't dig into your report that heavily. Unless like all of yours said that, but generally speaking, if all of your creditors close your cards, there's either a bankruptcy or a charge off or like something that caused it, right? So that's the thing that would actually affect your credit score more than just them closing it. But yeah, I would say some of them do it. Some of them do it if you haven't used your card for a while. So, I'm honestly, it's, giving advice to people. I'm guilty. I have a card that I opened when I was 18. I've had it open. So now for almost 24 years that I've had this credit card open. And I haven't used it in like probably 5 years. So I keep thinking like, oh man, it's like, in a drawer with all the credit cards I don't use. I'm like, oh my God, I got to get that out and use it. Cause that, to me, that's a big part. We go back to that graph of like the time of your accounts have been open. So for me, that's a big, like, wow, I would be upset if, that would really affect the length of a time my accounts have been open, because I have other accounts that have only been open for a few years. So,
Okay.
so I hope that, yeah.
I'm going to ask another one. You're talking about opening, in order to improve your credit score, open a credit card so that you can make payments on.
Yeah.
In our experience, we see a lot of people coming to us who have credit cards, and when they get new ones in that situation, because they don't have great credit, they're getting really high interest rates.
Yeah.
And so would you recommend people opening credit, and maybe they are going to pay it off right away, whatever, or at least that's the intention, but we all know how life works. And so is it beneficial for people to continue to open credit cards like that when they may be getting those high interest rates?
Yeah, that's a good point. I mean, I think, going back to talking about like we all didn't have perfect credit forever, I definitely fell into that in my early 20s. And my card was, my credit was not great because I did that. I was in college. Like, it was back when they gave credit cards out like they were candy in college. And what I didn't need, it was only a $500 limit, but I promptly used the entire $500 limit. And then I was like, I can't pay for this. I don't have a job. Right. So, from that perspective, that can cause some issues. So I would always tell somebody, don't get a credit card unless you're, or if you get a credit card limit and it's like $5,000, like, oh my God, I've had people like, that's too much. I don't want that much. Make it an amount, you can pay off. And I always tell, like, every month. So if you can't make a $5,000 credit card payment and you're not comfortable with that limit, call your bank and say, hey, I don't want that much. Give me $1,000. Because like, I know if things go off the rails, I've got this much, I can pay it off if something happens. Like, I know I can pay it off. But I think that's, from that perspective, I think it's important to, the other part real quick is that if you get a card with a $5,000 limit, knowing about utilization, you should only really be using 30% of the utilization. So tell yourself, great, it's 5,000, but I should only use $1,500 of it, because if I use any more than that, that's going to affect my score. So if you're really doing it for that very reason, store cards are another good way to do it, because the store card, I can only go to TJ Maxx, or I can only go to Home Depot, and I'm only going to do so much damage. Some people can do a lot of damage at TJ Maxx, myself included. I did it at Marshall's today, but anyway, beside that, you can only do like so much damage, and I can't go use it and where a lot of people get in trouble with that is they'll be between paychecks and they'll use their credit card to fill up on gas. And then they'll go and use it like, oh, I'm going to go out with my friends. Like, I didn't get my paycheck yet. Well, I'll just go out and what do? You spend like $100 at the bar when you're 22, right? So doing that kind of stuff, and then you get paid, and what do you not do? You don't pay off what you just spent 3 days before. So, and then it just kind of snowballs into that. So I think you have to be cognizant of that. And if you don't, maybe if you don't trust yourself to use it, using a store card to really start building that credit. Those are actually a lot easier to get than a full on, MasterCard, Visa, Discover. So
there's one other question here. Then Marcus has a question. Secured credit cards, should you open them, and do they help your credit when you do?
Yeah, absolutely. Should you open them? I think if you don't have any other avenue, like if someone is rebuilding credit, absolutely. On your credit report, there is a line, if you look at, there's like all this stuff, if you look at your actual report, which kind of is like a computer readout from like a 1980s computer, all these like lines, you got to like match stuff up. There is a spot where we'll say if it's secured or unsecured, but a bank isn't saying, oh wait, these 3 years of payments, oh wait, that was on a secured card, never mind, that doesn't count. Like it's fine. Like if you can get a secured card, if that's your avenue, go for it. But again, if you're doing it, make sure, going back to utilization, like if you're getting hey, I'll put aside $500, I get a $500 secured card, great. In your mind, you can only use $300 of that card or $150 of it, otherwise it's going to start impacting your credit. So getting a secured card so you can make payments, to only max it out at the $500 and then make a $20 payment every month. Is it helping your payment history? Sure. It's not going to help your credit score though, because if you then go, oh wow, I've had this secured card for a year, I'm going to go get a regular card, they're going to be like, your utilization is 100%. Like we're not giving you a card. So I think you just have to be responsible, with that in terms of how you're doing it. So,
and Marcus, you get a question?
Yeah, I was just going to ask Brandon. Often you see credit cards, there be like a balance transfer kind of feature. I was just curious if someone is opening up another credit card just to take advantage of that balance transfer, so they get it off of one and move it to another. Is that, how do you feel about that? It sounds like, would that be a negative, just as negative to kind of do that and move something over from one to the other?
So going back to, to what Carrie was saying about like high interest rates and all that, like if I have one card and it's, I made some poor decisions and I racked up a $5,000 balance, and now I'm like, I'm never going to pay this off at 22%. Like it's going to take me forever. Or you just look at how much interest is being charged and like, well, this is silly. I think getting another card, if it's at 0% or whatever the percentage, I think it's okay. As long as you're going to create a plan like to pay it off. But in a sense of like, is it going to harm your credit? Short term, yes, because you're going to have an inquiry. And also because you're going to have a brand new card, going back to that, length of time your credit's been open. That graph with the length of time your credit has been opened, it's a moving target, and it's an average of all of your credit cards, right? So that's where, again, minimal, not a huge impact, but where it could help is that if you have, you're getting a new card, now you've got this other card that you've just paid off that's now got a zero balance. So from a utilization perspective, it's going to help that. Now the problem is that I've seen way, and I know you already know what I'm going to say, way too many times, is like, cool, balance transfer at 0% for 12 months. Oh, there's 5,000 there. Oh, wow. Well, this Capital One card looks kind of lonely. I'll use it for gas. I'll take my friends out to dinner. And then what do you know? And like 6 months later, now I've got two cards with a $5,000 balance. So I see balance transfers are good and bad. If you are doing it for a good reason, sure, like that's fine. If you have a plan in place, but if you're just doing it to bounce around your balances, it's not the solution. It's not the right solution.
Okay, so it sounds like you just have to be disciplined if you go that route.
Yeah, for sure. I mean, that's credit. Credit is all about discipline in so many ways, shape, and form. I would tell someone before they did a balance transfer, I would say, have you made a budget? And they would probably say, what's a budget? What's a budget? We don't cover that in this tonight, but like budgeting, if you do a budget, your credit will always be good because you're never going to need credit. And if you do, you'll say, hey, I'm going to budget this much because I know I'm getting I'm getting a bonus. If you have that kind of a salary structure, you get some now and then you get a bonus every month or quarter at the end of the year. That's okay too if you're disciplined enough to do that. But then you're also gambling that as well. Like, what if you change jobs and then your new job doesn't give you a bonus for another year? So yeah, there's so many variables, but I think budgeting and just being responsible. The people that get in trouble with credit, myself included, when I did it, many years ago, it was just kind of like, oh, this will figure itself out. Like, I'll just use this card. You get caught up in the moment, like, oh, I want to, yeah, we'll go out again tonight, and I don't have any money because I burned my paycheck up on my rent on Friday, so I don't have any money, but I got a credit card. So I think that's just really what it boils down to.
Okay, thank you.
Yeah, being responsible isn't always fun. It's boring, but we have to do it eventually. So kind of going back to our slide 6 here. So I touched on, not letting stuff get to collections, catching up on, the third bullet down, like catching up on past due accounts. I think a lot of times people will get past due on something and then they'll be like, kind of whatever, it'll figure itself out. It won't figure itself out. You have to figure it out. Calling people, calling the business, calling your doctor's office, calling whoever, even if it's gone to collections, at that point you can still say, hey, if I pay this today, can you not report it on my credit report? And a lot of times they'll be like, if you give us a payment right now, we will either pull it off or we won't post it. Like, if you wait any longer, we're going to, or you say, hey, I'm going to pay you Friday when I get paid. Do not put this on my credit report. Because when you get a collection notice, a lot of times they haven't already put it on your bureau. They normally wait another month or two. Don't take that as golden fact, but generally speaking, they haven't done it yet. So if you jump on it, or just don't say, well, it's collections already, what am I going to do? Like, here's another one. So just be, get on top of stuff. And it's not always an easy phone call to make. We have to we kind of got to eat crow sometimes and say, well, I was irresponsible. You got to tell your creditors or the billing company or whoever it is and just say, yeah, it was dumb. Yes, I ignored. You can't tell, don't tell them that you didn't see the bill, because the bills come. We know they do. Just being upfront and say, I'm so sorry. Instead of ignoring it, it goes a long way. So catching up on those is huge. We kind of talked about paying down revolving balances. If you can, and you have a plan to, if you want to use balance transfers, there's a ton of credit cards now that, with the advent of a lot of the personal lending over the last few years, there's all these credit cards now. I get notices, like, for one of my city cards, they're like, oh, hey, you've got this available. Like, you can do it as a loan instead of a credit card, using your credit card. I think that's not necessarily a bad thing. Going back to a couple of the questions about a secured card, or Carrie talking about it, if you're going to use a card with a high rate, is that the best way to build credit? Another way to do it is all these cards that offer you, hey, you can just do a loan instead of like using your card to make a purchase. It's a really easy way. If you don't really, just use it to buy something that you were going to pay cash for it, and have a payment set up. And it's good practice. It doesn't maybe a good idea for everybody, but I think it's just something that you can do. And again, paying down the revolving balances, however you can. Budgeting comes into that in a big way. So that's really where you got to focus there. Limiting how often you apply for new accounts. I had a client one time that she was rebuilding her credit because she had completely destroyed it. Rebuilding it, she finally got to a point where she was, she felt really confident about, like, oh, I went to a store and, like, I got it. They said, hey, do you want to apply for a Macy's card or, Nordstrom card? She's like, yeah, sure. Thinking, I'm not going to get approved. And she got approved. So what did she do? For the next 7 months, every time she went shopping, she applied for a store card, and she had like 13 inquiries on her credit report. And I'm like, how did you even do this? Like, I don't know. I was just excited that I was able to do it. I said, fair, let's not do that anymore. Just stop with the store cards. I know the discounts, the rewards are very, very tantalizing, but just hold off on that. So, once, one or two, maybe a year, like I would say one a year. I try to keep, like, I get offers like, oh, do this, and if you spend this much, we'll give you $300 back. And, like, I do use a credit card for all of my stuff, and then I pay it off at the end of the month. So I can think, well, well, I could use that card for a month. But like, if you start applying for more, it reduces the amount of time all of your credit has been open, but you're also going to get inquiries. And you might not think today, like, oh, it's fine. Like, I'm not planning on doing anything. And you'll, 6 months down the line, you're like, oh my God, I need a new car. I feel like, I'm going to go buy a new car. Hey, turns out we're going to sell our house because I have to move. Little did you know, you've got 6 inquiries on your credit report. Will it keep you from buying a car or a house? No, it won't keep you from buying it. What it will do is increase your interest rate because you appear to be a higher risk. Because every time you're applying for a credit, a bank has to assume you need their credit. So don't apply for it unless you really need it. Or if you're like, okay, I'm getting this card because I'm replacing this other one. It's fine. Leave the other one open, use this one. But doing that like every month because you see a bonus, or you go into TJ Maxx, or you go to Home Depot and they say, hey, you're buying the stove. If you use our card, you get 0% interest. And you're thinking, I was just going to use my debit card. I was just going to pay it out of my savings account anyway. Then don't get the card. Every time it's a hard inquiry every time. And you just never know. You just never know when you're going to need your credit to be as good as it can possibly be. Last and probably the most important, in my opinion, is checking your scores. Too many times I talk to people, I say, hey, how's your credit? Oh, it's good. Oh, like, what's your score? I don't know. So, well, how do you know it's good? Well, I don't know. It probably isn't. Like, okay, well, what if it isn't? You're like, how do you know? There's credit scores and moving target. It changes all the time. One little thing can make it go up or down. One account that's not reporting correctly can keep you from getting approved for a loan, to buy a house, to refinance your house, to buy a car, to get another credit card, to maybe you really do want that Home Depot card, and you go in there like, oh, sorry. You say, well, what do you, my credit's fine. And you don't realize they send you things. Yeah, you've got charge-offs and delinquencies. And then you open your credit report. Oh my gosh, that medical bill. Okay, maybe you didn't get the bill because you moved and they had your old address, like stuff like that. If you're not checking your credit, I check mine at least once a month. I used to do it a lot more religiously when I was like, building it back up and getting my payment history where I wanted it to be. I check it at least once a month now, and I have alerts set up through Credit Karma. Again, we're not affiliated with Credit Karma. It's a site that I really enjoy using because it's free, and I can see my TransUnion and my Equifax report. So for me, it's a really good fit, and I can use it for that factor. But keeping in mind, the negative marks, they diminish over time. Most of them fall off your report after 7 years. That's right, 7 years. And 7 years, it'll be 2028, which is like way in the future. I think we'll have flying cars by then. But like 7 years is a really long time. Bankruptcies are on for 10 years. 10 years. And trust me, a bank doesn't want to touch you if you've had a bankruptcy, at least in the last 5 years. That's a big, obviously a big red flag, right? Again, big reason to monitor your report is if you see something that's not accurate, contact the bureau. And they aren't all the same, because some credit cards and loans don't report to all of them. Most of them do, but they don't always report to all of them. So you can initiate a dispute. You can say, hey, I paid this on time. They're the ones that had it wrong. And you send it. And if they don't reply, like if you get like a collection agency or another biller, if they don't respond, don't quote me on this, I believe they have either 30 or 60 days to respond. If they don't respond, the bureau pulls it off your credit report, no matter whether it's valid or not. So if you have something that you're like, oh man, I can't believe that made it in my report, dispute it. You can put your side of the story. It literally will print it on your credit report. So everybody that pulls your report will see it. And if they don't respond to it, it'll pull it off. In the worst case, it'll be there, but it'll have your it has your reasons for why it was delinquent or why something was late. So that's all on that. So we can jump to the next slide, Hillary, when you're ready. So I've kind of talked about how to access. I personally use Credit Karma. There's a couple other websites very similar to Credit Karma. Credit Karma is free. They have a lot of advertising built in, and a lot of recommendations where they say, hey, based on your score, we think you would be you have a highly likely to be approved for this card, or maybe for this personal loan, or hey, we see you've got a lot of credit card balances. Maybe you would benefit from a personal loan to pay them off. So Credit Karma is good for that. If you don't want to go through all that, you can get one credit report free every year through annualcreditreport.com. Be aware there's like a million different sites that try to look like annualcreditreport.com. annualcreditreport.com is the only one that is, monitored by the Consumer Protection Bureau. So they are basically put that in place so that everybody gets a copy of their credit report every year for free. It doesn't have your score, but it is the report itself. You can also contact to TransUnion. Information is also there. You can go to the next slide, Hillary. And then Equifax, the TransUnion, Equifax, Experian has kind of fallen off of the map a little bit. TransUnion and Equifax are the two big ones. Most banks use TransUnion exclusively. Some use Equifax exclusively. So you might, if you do monitor your credit, you might see an inquiry that's only on one report versus the other. That's because some banks, they have to pay to use the report. So some banks only use one. So next slide, take action. What are you going to do? How are you going to do it? We kind of talked through a lot of these already, but just something to kind of think about. Are you going to share your plans with anyone? Sometimes people keep their credit a secret, even from their significant other, whether they live in the same house or not. I'm not telling you to share your finances with everybody. However, it's a good way to keep yourself accountable. Or maybe, as a banker, like I've helped people do that and say, hey, where's your score at? Like, cause maybe they need their score to be at a certain point for us to get a loan for them. So share it with somebody, or like have a bank, they can help you, guide you and see, like what your score should be, have them keep you honest and have them, check in with you or ask them to say, hey, here's what I'm doing. Do you think this is going to help? Or I was thinking about this, those of us in the banking industry, myself having worked on the consumer and the business side, I've seen everything, and I've seen people build their credit from one place to get to another place. I've seen people with really good credit get declined for stuff for really funky reasons. So it's people in the industry, we kind of have a good idea of what it takes. So if you have a trusted, advisor at a bank or an accountant or your attorney, whoever it is, like anybody that you trust with money like that, they're a good resource. And they, people like me, that we talk to a lot of people throughout our day and our week and our month and throughout our year, hundreds and thousands of people probably, that we gather all this information so that we say, hey, I remember this happened one time and here's what we did. So, don't pay that off, pay this other thing off, and let's get that down. And then in a month, you'll be in good shape. So there's a lot of ways we can do it there. So we can just go to the last slide, just our disclaimer, so you can all read that really quickly. And then if we have time, we have a second, we can pull up, we actually have a FICO score estimator, and we can actually take a look and just kind of walk through. Hillary, do you have that link? It's actually on the MyFICO website. Thank you. Sorry, I was having technical difficulties getting into Zoom with my laptop, so I was supposed to be doing all the work. So yes, you can just click on get started there. And this is a free thing. This is not like something sponsored that like the bank is paying for to get us into. It's a free estimator. So it's myfico.com. It's the FICO score estimator. So if you're wondering like what if, or if you're somebody who's like trying to build your credit and you say, like what if? So like, let's say, how many credit cards do you have? Let's say you have, let's say we have 5 or more. Let's say we're one of these people. So 5 or more. How long ago did you get your credit card? Okay, let's say we've had it for 8 to 10 years ago. So we've had our credit for a long time. Same thing, first loan 10 to 15 years ago. How many loans have you applied for in the last year? Let's say 0. How recently have you opened a new loan or credit card? That kind of goes to the last one, but let's say more than 6 months ago. How many of your loans or credit cards currently have a balance? Let's say, I don't remember how many we said we had. Let's say 0 to 4. Besides mortgages, what are your balances on loans and cards combined? Let's say 20,000 plus. When did you last miss a loan or credit card payment? Let's say I've never missed a payment. How many are currently past due? Let's say we don't have any past due. What percentage of your total credit card limits do your credit card balances represent? So let's say we are 70 to 89%. And let's just, we'll pretend like of all those cards, we don't even have, we've only got a $10,000 credit limit amongst all of our cards, but we've got $7,000 outstanding. The last 10 years, no bankruptcy, no repo, no collections. So here's what's funny, right? So here's your range. Now it's a range because there's a lot of different factors and everybody's situation is really, really unique. So this is someone who's not missed a single payment. They've had credit for 15 years. So even if they were 25 when they got their first, credit card, because they made it through college and they were intelligent, unlike myself, and they didn't get a credit card until they were 25 and had a job. Smart move. So they're now 40. They've had credit card. They've got a mortgage, never missed a payment, but of all their cards, they're 70% utilized. And let's say it's only because they went out because they bought a new house. A year ago, they said, you know what? We were talking about getting new appliances. I've got my Amex card. I get rewards on my Amex card. Let's go to Lowe's and we'll buy new appliances. I'm feeling saucy. I got a big bonus from work. We'll use my card because I'm going to get my points, use my credit card to get my points. And then I'm going to pay it off as soon as I get that statement, I'll pay it off. Statement gets printed. You're waiting to, I got my payments not due for another couple of weeks. And then you realize, oh my gosh, you know what? Interest rates, my banker just told me interest rates are really low right now. We should think about refinancing our house. I call my mortgage guy, says, oh yeah, this is the best. They always say it's the best time. Hey, it's the best time to do it, right? It's a great time to do it. Rates are really low. I know you just buy your house, but hey, rates are great right now. We could save you, 2% on the rate you got last year because, your score was okay last year. It's got to be better now. They run your credit. He pulls up and it's 685. And he goes, what happened? Your score was 710. What did you miss payments? Like, what's going on? And you say, no, I bought some appliances, but I'm gonna pay them off. I have the cash, all that. Yeah, your score is 685 though. So I don't even know if we can approve you. We might have to go FHA, or we might have to do this. And now your rate's going to be, I'm not going to be able to save you. It's going to be 1% higher than I thought it was going to be. Maybe it doesn't make sense. Whereas you go back to that same scenario, you hadn't had that utilization. Again, this is no missed payment. So we're not saying like you're in collections and you told everybody I'm out, see you later, not making any of my payments. This is made all your payments, everything on time. At the time you applied for new credit, you have a balance on a couple of your credit cards and you might not be able to refinance your house. So we could go through this a million times. And I invite everybody to, you can kind of dig in and kind of do it yourself and just kind of go through and see what ranges might do what. But the important thing to know is that at every moment, everything you're doing, and this goes back to the very first thing I said, which is you play the game, everything you're doing could affect your score. So you have to be very, very cognizant of that. In that case, you would say, hey, I'm going to make a payment, and mortgage people will actually let you do this. Say, hey, I'm going to pay that off right now, pull my score again, and they can actually do it where they will actually go to your lenders and have them like reevaluate your score based on a recent payment you made, which is pretty cool. And then he'll be like, oh, hey, you're 780, like you're good, because you don't have, your debt's gone. But that's just something really cool. Everybody can kind of play with that, and I think it's a good place to wind up. So I'll stop there. And if we've got other questions, I didn't see if any questions came through beyond what had been brought up while I was speaking.
Nothing came up while you were speaking, but if there are any questions now.
I'll ask one, Brandon. I'm not sure if I didn't catch it during your presentation. But you'll see things out there for people that can repair your credit. And, could you talk about maybe kind of what that is, benefits, the cons to that?
Yeah, that's as a banker and as somebody in my career, like I'm always looking out for people's best interests, and that's just me as a person. I'm a firm, you know, I talk about credit karma, but I'm a firm believer in karma. I treat people the way I want to be treated. A lot of the credit, the credit fix, and I feel like you don't see too many of them now. You don't see them as much now, but a lot of those used to be like, hey, let all your stuff go south for like, they would tell you to like stop paying things for like 6 months. And then after that, then you'll really be able to negotiate with your card companies. And all I could think of is, that seems like that's the worst advice, you know, you could ever give me. So a lot of times I would have customers when I was still working in the branch that was, you know, that would come up and they would say, oh yeah, they're going to fix my credit. Well, they told me not to pay everything. And I said, that's not the way to do it. So I think there are resources out there. To be honest with you, and you know, I don't think I'm biased having worked at a bank, but if you have a good relationship with anybody at your bank, I would ask them, that's where I would start. And I would say, hey, I'm trying to work on my credit. Like, what do you see? Or like, what do you think? Not what do you see on my credit, but like, what do you see with your customers? Like people who have rebuilt it, how are they focusing on it? What tools can I use? And Lord knows there's a million websites and blogs and you know, things. NerdWallet is a really good website where they go through how to repair credit, getting very, very specific. When I was rebuilding mine, I mean, it was about 18 years ago. So when I was really building mine, there was a lot of, it was before Reddit and all of the kind of newfangled blog type chat sites. But, you know, there was ones that were just for credit repair, and people would say, hey, mine used to be this. And it was kind of going back to having someone to hold you accountable. But it was like, hey, mine was this. I've been doing this. And it was just seeing what other people are doing, I think, is honestly the most important. A person can't always do it for you, but knowing how to get there, I guess, is my point. So there are some good companies out there that can help you, but from a guidance perspective, just speaking personally, I think if you have someone you trust that can say, hey, here's what I've seen people do, or like, here's where you got to focus. Like, because a lot of times if someone's credit isn't great, they don't know where to start. You know, they have no idea where do I start? What do I do? I don't even know. You know, screw it. I just won't even do it. Like, I'm not even going to try. Right. So I just won't do it. Forget it. So I think having a focal point of where to start, I think is again, for me, I think finding somebody that you trust, that you can say, hey, here's what I'm going to try. What do you think? Or what have other people done that are in the same position?
Thank you.
Yeah, you got it.
Who specifically at a bank would you talk to? Like when I've gone into a bank, I know to go to the teller. I don't know who necessarily the other people are that are there.
Well, so I think it's a good question. I'm obviously biased because I'm a business banker, so I think I'm a great person to talk to. But a lot of people are like, oh, business, no business, and I don't sit in a branch very, very often. But the bankers, anybody at a desk. However, I think it's important. Like if you're like, I think my credit's okay, I'm thinking about buying a house, or I know rates are good, I might refinance my house, or I might, whatever it is you might think about doing, that's a good person to talk to. Most banks, I know most branches, at least one day a week, like there's a mortgage person there. So talk to the mortgage officer if you're thinking about that. And honestly, I guess to answer your question, the mortgage folks, they know credit about as we both are kind of it, because like a lot of our lives revolve around credit. If I'm helping someone with lending, they're buying a building, they're expanding their business, whatever it is. If you're a mortgage person, they know credit. Like we have to know credit, because somebody can come to us with, I have to buy this house, or hey, I have to do this. And if their credit's not where it is, they kind of get even more, they get more granular because they have seen so many credit reports and so many people's credit. They'll gladly, I can tell you, they'll gladly talk to you. I mean, they're always super busy. But I would also say too, like if you don't have a relationship, the people that sit at a desk, I know sometimes people like don't want to go talk to them because like, oh my God, they're going to sell me something, right? Like they're just hanging out. Like I was in a branch to meet with somebody, like they're just hanging out. Like they come and talk to me when I'm in there because they're just like, hey, if they're between appointments, And I would say that too, a lot of times now you're a branch, whichever bank it is, a lot of it now, because the staffing is so crazy, make an appointment, but call them, call and talk to the manager, or call and say, hey, I just want to come in and talk, maybe review my stuff, and just want to talk about credit. I've got some questions, and I want to make sure I'm going to the right person. The manager, I guess, would be a good place to start with that. But again, if you're ever in a branch and you see somebody that with a mortgage title on it, even if you're not buying a house, go talk to them, because they know credit. And if they can spare 5 minutes, between flying around, they will be happy. They should be happy to talk to you.
Okay, so I want to be respectful of everybody's time. We're at 7:28 and we are scheduled until 7:30. So unless there are any other pressing, burning questions about credit, now's your chance. Otherwise, we will say thank you so much, Brandon, because I think what I have noticed in some of these presentations is that the presentation's really great, but just ask, I know I heard this random thing about credit, and I need to ask somebody who knows the answer is just so helpful in so many ways. So I'm not seeing anybody with any last burning questions. So thank you so much. And I hope everybody goes into a bank and talks to somebody, because I know I never do. And it seems
don't be scared. They want to talk to you.
Yeah. So Hillary, are there any other final things to know? Is there
No, I'll be sending out an email with some of the information that we had shared with us, so you can keep an eye on that, including a link to the FICO simulator if you missed it. And if you do have any other questions that maybe you just rather send it an email and have answered more confidently, I'm sure Brandon would be happy to give a short little answer that way as well.
For sure.
All right. Well, stay tuned, because we're gonna hopefully be doing some of these down the line, and we will share that information when we do. And otherwise, have a great night, and I hope everybody has a holiday season that is enjoyable in whatever way you enjoy it.
Thank you,
everybody.
Have a good night.
Bye-bye.